hurricanes, floods, wildfires, earthquakes. With losses totaling $130 billion, £99 billion, insurance folk feel like 2017 is a year to forget. There's always a silver lining for insurers for these mega claims, though. The more customers see such end-of-day strife on the news, the more insurance they buy, and the more they're prepared to pay for it. Still, investing directly in underwriting insurance policies can be a high-risk game. Far safer to back the brokerages and managing agents who act as the go-betweens, introducing the customers to the underwriters and taking a commission. Brian Marsh has been on each side of insurance during a career of more than half a century, making himself a comfortable fortune both broking and underwriting. Nowadays, he chairs BP Marsh Partners, a venture capitalist backing brokers, agents and other financial intermediaries. Its clients tend to be entrepreneurs setting up in business on their own and looking for investors. It has been going since 1990, and has invested in 46 companies, pumping in up to £3 million at a time, usually for a big equity stake. It has just increased its limit per investment to £5 million. Unlike most venture capitalists, Marsh doesn't raise external cash from pension funds and the like, although this may happen. Instead, it invests its own money, reinvesting the proceeds it makes when it sells out of its investments. Marsh uses his contacts to bring in new business, but is increasingly leaving the work to his young team. Chief Investment Officer Dan Topping, 33, Head of Investor Relations Camilla Kenyon, 42, and Alice Folk, who's the Managing Director, aged only 30, may be young, but they have been with the firm for many years. They have overseen healthy increases in the value of its investments. Net asset value gained from £73.8 million to 73p a share a year ago to £88.8 million 304p now. Not swing from the chandelier's excitement, but steady and sustainable. The share price has had a strong run, but house broker Panmure reckons there's more to come, saying the gap between the share price and NAV should fall from 15% now to 5%. What are the risks unless you think people are going to stop buying insurance? Clue they want. The main banana skin is obvious. The Marsh team might back a turkey and lose money. As the number of deals rise, that risk gets bigger, but so does the diversity of exposure, muting the damage to the whole portfolio of the odd blow-up. There are also risks around how to value a refined buyer for micro-investments like Marsh makes, and, while you can't blame Marsh for taking a back seat at 76 years old, it does represent a risk. Note that he and his family are the biggest shareholders. How long will they stick around? The presence of David Newton's Helium Fund on the share register offers comfort. Marsh looks a relatively steady bet in a pretty bulletproof market.